This is by far the easiest ICT trading strategy for beginners, which can pass your prop firm challenges in a single day and turn you into a consistently profitable trader. I have made countless number of payouts and millions of dollars of funding using this strategy. These were all the people who made their fortunes using this secret strategy that I am going to reveal in this video. My goal is to take you by hand into a world that you didn't even know existed. A world which is going to reveal you a secret strategy and tactics that 20-year-old use it to get paid thousands of dollars from the prop firms every single month with this. This strategy has been backtested by 9 years of data by my liquidity inducement theorem team. So regular people went from very regular jobs like waiters, students, university students, and allowed them to achieve financial location at the time freedom, and will allow you to wherever you are right now to wherever you want to be, essentially fulfilling all your greatest desires. So watch this video till the end to make it happen or stay broke. How to become top 1% trader. Identify where 99% are placing their stop losses and wait for them to take it out by the market makers and exploit the glitch we have and produce insane results. There are two types of market maker price behaviors will be there. One is for reversal and one is for continuation. For reversal, the market maker want to take out every seller before they want to continue the price to move down. So that's why they will produce fake break of the structures and also fake build-ups in order to induce early sellers first. So after everybody was taken out here, they will take all the liquidity and they will sell here. The same cycle repeats every day. Every day the same stuff happens. And also this is for the continuations. For the continuations, they will make the fake break of the structure by collecting all the money down here, and they will execute the orders here. The big players will execute their orders. The hedge funds, investment banks, they will execute their orders here because they can't execute the orders wherever they want, like as retail traders, because they will get a lot of liquidity problems. So that's why they can only execute the orders in these type of areas. So this is the main difference between the price behavior before the reversal and price behavior for the continuation. This is where a lot of newbies will make a lot of mistakes. They don't understand the bird's eye view of the market liquidity profile, and they will directly take the trades from the 1 minute liquidity pools to the liquidity pools. This is not going to help you anywhere in the trading. You should always understand the bird's eye view of the market. What's the 15 minutes is telling you? What's the 1 hour is telling you? What's the daily is telling you? What's the 1 minute liquidity profile is telling you? Then you can easily profit from those moves. It's very easy. You can't even imagine how much RR you will get once you understand the market context. So now I will explain the candle formation and explain you the edge. In order to win the war, you should understand your enemy weaknesses. Who is your enemy? Your enemy is your market maker. Market maker is the player who is taking the opposite side of your orders. If you lose money, he will win. If you win money, he will lose. This is the zero-sum game. No money is coming out of thin air. This is the thing you should understand. You should understand the daily candle creation first. Every candle has a open, low, high, close. So if you deep dive into this stuff, candle creation, every candle is formed because of the AMD cycle, accumulation, manipulation, and distribution. This is what ICT talks about. So if you see, the first half of the candle will accumulate. This is the Q1 of the candle. The first quarter of the candle will accumulate the price action, because to engineer more and more liquidity into the marketplace, they will create the price action like this. They will create lot of huge buildups to induce lot of retail, and in the Q2 they will manipulate the price action. They will manipulate the price, and the Q4 they will distribute the price. This is how daily they will move the price. They will accumulate the price in the Asian session, they will manipulate the price in the London session, and they will distribute the price in the New York session. This stuff is happening daily. So this is where we are exploiting the glitch, which we have advantage. These market makers should follow some rules while market making, because they can't move. These market makers have set of ADR range. There is a thing called ADR range which they should respect. This ADR range is implemented by the central banks on the market makers. They can't move any asset class above the ADR range. So this is the rule these market makers follow and move the price. So that's why if you see, the average daily range of a GBP is 200 pips. It can't move more than 200 pips. So this is the advantage we have, and we are exploiting this advantage on our benefits. We know that according to the OHLC theorem, the high and low of the days will form after the liquidity is taken out. So we are directly entering at these levels. We are directly entering at these levels at the highs and lows of the days to get the highest RR trades possible. After everybody is taken out, after every strategy is taken out, we are entering like this here by observing the price behavior. The price behavior, like it will be like this after everybody fake change of characters. everything is taken out, we will enter here and target the next liquidity. So this is how we will get the highest quality and highest RR trades. This strategy have 80 to 90% win rate. You will get very less losses because this is the closest thing to the market makers. There is no other video in the YouTube explaining this process as I am explaining you to you. So these are the basic understandings you should know in order to understand the edge I am going to show you. So let's move on to the edge. This is the golden formula you should exactly follow in and in out, escape the rat race and get the financial freedom you want. If you follow the checklist as it is, you will milk the prop firms. You will pass the challenges in a single trade. So the first thing according to the checklist is you should identify the clear liquidities for your eyes. You should always identify the liquidities that are very clear to your eyes. You should identify the liquidities like this. In the 15 minutes time frame, if you observe the liquidities, you can identify very clear liquidities, and those liquidities only should be previous days internal liquidities and previous days external liquidities and Asian liquidities. These are the only three liquidities that are 90% possible and used for the reversals. Nothing, you should not use every 1 minute liquidities and 5 minute liquidities like that. That is why you guys are not making any money from the markets. You are just taking a lot of trades from every liquidities. So you should only use these type of liquidities, because me and my team backtested a lot of years of data, 9 years of backtesting data, and we found out 90% of the day's highs and lows are formed in these type of liquidities after these type of liquidities are taken out. I have read lot of books about the market makers because I have studied my enemy and his moves and the rules he should follow, and I came with the strategy. So the second thing is wait for the liquidity to be taken out. You should wait for the liquidity to be taken out. So what you should do after the liquidity is taken out, observe the price behavior after the liquidity is taken out. You should observe the price behavior. If you assume this is the 15 minutes time frame, the 1 minute should look like this. 1 minute should look like this. If you see here, the price behavior is there. There is a fake break of the structure is there. So, and this is the liquidity where the early sellers are getting trapped. A lot of liquidity is taken out. Everybody is taken out in the marketplace. So we should wait for the change of character at this level and enter at this mitigation. This is the tightest stop loss we will get for this type of entries, and we will directly sell the marketplace, simple, targeting the next liquidity. This is how we will get like sniper entries, and our equity curve will look like this. Our equity curve will look like this, sniper entries, crazy sniper entries, whereas normal retail traders with equity curve will look like this, because these people are just targeting like 1 RR and 2 RRs, whereas we are targeting for 1:10s and 1:20s. This is very easy, guys. This is the glitch in the matrix. You should just get habituated with the strategy and you will make life-changing amount of money from the strategy. This is very easy because we are using the 1 minute time frame for the entries and targeting the 1 hour liquidities. That's why our RR is very high when compared to these all other strategies. This is very important. That's why our equity curve is looking like the cleanest thing ever possible for any trader using any strategy. So this is the exact checklist you should use to escape the matrix. Simple. Now I will show you tons of examples using the same checklist last week, and you can take some notes. These are the trades I took this week using the strategy I have just showed you. If you see, we have made our 40 RR account gain in a single week. Name me a strategy which will make you a 40% account gain in a single week. You can't name anything. See here, the first thing we identified is, as I told you, we should always identify the liquidities clear to us. So when coming into the London session kill zone, these are my kill zones. Our team backtested every timing, and these are the two timings, one for the London session and the one for the New York session. The data is telling these are the main important timings that we get reversals. If you see, every trade I take is in the same timings. You can spot every reversal on the same timings. These are all my trades this week, this month. But in this video, let's only discuss about this week trades. If you see, every trade I take is simply on these kill zones. This is the importance of the data. The team will help you there. The liquidity inducement theorem, everybody is a killer, everybody is a data collector. We will go back into the 2008 charts, 2010 charts and collect lot of data. If you see here, this is the previous day's internal liquidity we have marked, and simply what we should do after taking the liquidity, you should observe the price behavior towards the liquidity, how the price went and took the liquidity. If you see the price behavior towards the liquidity, the price has made a trend line. This is very important. The price has made a trend line before taking the liquidity. So the price behavior is suggesting a reversal, because a trend line is forming, everything is forming out. So there is a reversal very near. There is a reversal is very near to the price. So build-up is telling the price is reverse and the liquidity is telling the price will reverse. So we should wait for the simple change of character in the 1 minute time frame This is where we got the simple change of character in the 1 minute time frame, and we entered with 3.5 pip stop loss here and fixed target 10 RR. Simply you got hit 10% account gain. Boom. And let's see this trade. So if you go back and identify the 15 minutes time frame, we just identified the Asian liquidity. So this is the Asian liquidity we have, and I will observe the 1 minute price behavior there. If you see the 1 minute price behavior, I always tell you the first break of the structure is always a trap. The first break of the structure is always a trap. Now all the SMC fools, retail fools will think this is the huge good OB mitigation, everything is there. They will have a lot of orders here, and here there is a liquidity, and we will just enter after all this liquidity is taken out, and this is our change of character. So after this candle I just executed the price with 4 stop loss. Boom, it gave me another 10 RR. Simple. The trading can be simple, guys. See, every trade I am using the same checklist I showed you, nothing fancy, nothing new. At the same timing, same checklist, same pair, I only trade GBBUSD. See here, same thing. I identified the Asian liquidity, and same thing. I will come to the 1 minute time frame and observe the price behavior, how the price is behaving. The price is behaving like this. It is forming a build-up. Lot of build-up is forming. So it indicates the reversal is near. So this is where the break of the structure happened. Boom. I capitalized this whole sell. It gave me another 10% account gain. So I will show you this trade. If you see here, the liquidity was taken out, but the algo timing was not confirmed here. So this is not my trade. If you see, that's why this first break of the structure worked. So you should only enter in the algo timings. This is where the high quality moves will come to you. And also if you see here, liquidity was taken out here, previous day's liquidity was taken out. You should observe the price behavior. The price is moving normal, higher highs, higher lows, higher highs. Yeah, the build-up has started now. So what it indicates, what the build-up indicates? The build-up indicates the reversal is near. So this is the break of the structure we got. I exactly entered here, stop loss just above the high. I got simple another 10% account gain. If you see, I got 10% account gains in a single week. Yes, we took 1 or 2 losses in the meanwhile, but they are nothing compared to the gain you will make once you follow the strategy. So this is the strategy I want to gift you all to my YouTube community. So you should just practice this strategy over and over and again, then your equity curves will look like this. Remember guys, you will lose a lot of money and blow out a lot of challenges if you don't have a proven strategy that was backed up with the years of data. This is very important. You can't be profitable in the markets by just watching a YouTube video about the concept. You should need an edge that is going to appear over and again in the marketplace. Whereas I refined this liquidity inducement theorem for the past 5 years by keep on refining and adding up a lot of data. But if you put in the work and lot of hard work in backtesting and everything, you can eventually change your life and travel the world and simply trade. Literally, I am receiving tons of messages from the YouTube community who are watching my videos and creating their own strategies based on the concepts by just watching the videos over and again. You can watch ton of videos about the liquidity inducement theorem in our YouTube channel, and if you want any other videos regarding any other topic, you can just comment on the video. I can make a clear explanation about the topic you need. Or if you are a type of person who want to foster their growth and serious about the trading and want to get funded in 90 days like these people who are consistently profitable in the markets and milking the prop firms every month, day in day out, like Eduardo who has made $1,300, and also like Friday who made $1,500, and also Ajibola who made $1,200. They are not doing any magic spells or anything. They also came from the same situation like you guys are. They are also having a lack of strategy problem and they have a lot of mindset issues. This guy Eduardo came to me 2 months ago and he don't know where to look at and where to look for entries or anything. I completely teach him and we worked on his mindset, beliefs, etc. And I gave him my 9-point checklist LIT, and he became continuously profitable trader after 60 days. This can be you. If you put in the work, then you can change your life and retire your family. The main reason why they are doing this much good and when compared to you guys is I have spent 5 years of my lifetime refining my strategy over and again, day in day out, backtesting 16 hours per day without sleep some days, and came up with the strategy by constant lot of losses and lot of lessons, lot of blown challenges. I developed this strategy which has over 80% win rate, which can benefit a lot for your mindset and your peace. Then your equity curve is like going to look like a rocket, and your profit splits will look like this every week in, week out. So you are not going to go through all the hell I have gone through, and you are taking your first trade by using all the data I have collected. your first trade is going to look and it will come up with the 80% win rate trade. So this is what gives you the edge and you can milk the prop firms. If you want to become a 500 trader in 90 days guaranteed and want me to one-on-one mentor you and access to the liquidity inducement theorem, 15 GB of exclusive private content, and want me to review your trades in the journaling template which you will be added once you join the one-on-one mentorship, and also live trading 3 times per week with the private community members and lifetime access to the LIT private Discord and video mentorship tab where the one-on-one video recordings will be posted, and also access to the journaling template where you will be journaling your trades, and also the backtest of the 5 years of the edge we use. So click the link in the description if you want to become a funded trader in the 90 days guarantee. I am so confident, excited for the one-on-one mentorship, guys, because I have seen ton number of students who are facing the same type of problems like you with the consistency of the trading and losing challenges over and over and again because of the lack of strategy and risk management and psychology. And after joining the mentorship, they got insane changes in a 1 month itself and they got funded in the 90 days. I can give you guarantee that you will be funded in 90 days if you put on the work and if you complete all the tasks I gave you in the one-on-one mentorship. And if you are still struggling to get consistency in the trading after the 90 days, I will do the live trading every day with you until you will get funded and become consistently profitable in trading. This much of guarantee and confidence I can give you about the liquidity inducement theorem and become a consistently profitable trader using the hidden layer of smart money. It is a very wise decision than buying a prop firm account without having a proper knowledge when compared to the investing in the quality education and acquire the edge that was proven back in the data.